Valeant Pharmaceuticals is a great example of why I switched my trading philosophy to a trend following system using stage analysis. In my opinion, the problem with fundamental analysis is it's hard to tell when a fundamental problem with a stock actually evolves into something major that causes major losses within the stock, or maybe a bear market in an index of stocks. For example, when Valeant broke down below the 30-week moving average in late 2015, this is where problems started surfacing for the company and exposing, major issues with the way they were raising prices on drugs. And from a stage analysis perspective, whenever a stock breaks down below the 30-week moving average and the 30-week moving average starts declining, you get out of the stock without asking questions. And now with fundamental analysis, you might start believing that the market is mispricing the stock and the stock's actually getting cheaper and becomes a better buy. And this is actually what happened with Bill Ackman, who was a notoriously involved with this stock. And he actually doubled down on his position in this stock in November of 2015, according to this article. And if you look at where he did that at, that would have been around here after the stock was below a downtrending moving average. So from a stage analysis perspective, this is something that you would never do. And it turns out that this stock continued to go lower and cause catastrophic losses for anyone that was involved, especially if you bought well up here after the bull market had been going on for around 5 years. So there was plenty of time to make money in Valeant. It actually broke out into a new bull market all the way back in 2010. You can see the massive increase in volume here. It actually was a big stage one base before this, and then had, like a three bagger rally, consolidated for a while, and then had another massive up leg, one more consolidation, and then the final up leg before the problem started being exposed. Now, one thing that's common within sentiment with as typical for human behavior is when a bear market starts, it causes, anxiety and then denial. And denial is really where you'll find yourself actually doubling down on a bad position because you still feel that the market is wrong, and you almost want to counteract that as a trader by stepping up your bet. And that's something that sometimes works, but other times in catastrophic bear markets causes significant losses, and that's what you want to avoid as a disciplined trader. One other thing to note with Valeant is that cracks were beginning to surface within the biotech stocks even before the trouble with Valeant started happening. If you were using stage analysis and you were monitoring the IBB biotech ETF, you would have noticed that it started breaking down below the moving average in August and September of 2015. And then subsequently in October is when the stuff with Valeant started happening. And you also notice that biotech started underperforming the S&P 500 around the same time it started breaking down. So two signs that there could be trouble brewing within a former market leader, and this typically happens after a long stage 2 advance. You get some sort of stage 3 topping phase and then a bear market of some sort, a stage 4 downtrend. The number one rule of stage analysis, if you go to my stage analysis page at nextbigtrade.com, is to stay out of all stocks in stage 4. And the reason you do this is because it prevents you from taking big losses. Taking major losses is the only way to knock yourself out of the investing game. So it's really the number one thing you want to do to stay in the game and eventually be around for a big bull market where you could make big money. So if you look at Valeant, actually on the stage analysis screener, which you can go to at screener.nextbigtrade.com, but this stock has been in stage 4 since, for 74 weeks, which dates back to, that time in late 2015 where Valeant started going down below the 30-week moving average and has never retaken it. And one last thing to note is that really, like I said, this getting out of markets before they go into stage 4 is what helps you avoid major bear markets. Looking at the S&P 500, you can see the two major bear markets in 2000 to 2002, and then obviously the financial collapse in 2008. And by just using that trend following system and getting out of the market as it started downtrending, you were able to avoid these massive losses. And this was another reason that I got on board the stage analysis system, is that I wanted to find a system that could navigate me around something like this. That doesn't happen very often, but it is possible to happen within markets. And you'll notice that obviously the market retests the moving averages a few times a year typically, and then holds them in a bull market. But in my opinion, it's better to be, prepared to handle the volatility and be prepared to work on your capital preservation during these periods, because you never know when something like this will morph into a bear market. So essentially, when you're trend following, the worst thing that can happen is a whipsaw market where no trend develops and you keep getting kind of nicked by small losses as the market fails to start trending again. So that's where the trend followers actually get hurt. But whenever the market's trending is where the trend following kicks into gear and actually works. And the markets overall tend to trend most of the time. And if you're in a market that's actually going sideways, that's why you expose yourself to as many markets as possible, because typically there's a market out there somewhere that's in a nice trending phase. So overall, if you're looking for a system that helps you navigate markets by using a simple trend following system, using a simple moving average and observing price action, and just building basic rules around where price is going, I would highly recommend Stan Weinstein's book, Secrets for Profiting in Bull and Bear Markets. And you can check out my stage analysis page at nextbigtrade.com for more information on this trend following system.